Good morning, everyone. Today is Wednesday, March the 1st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are dancing at that very, very important number, 39.74. It broke in the overnight. Notice the low that we made on this candlestick formation last week, 39.47.50. Let me change that. 39.47.50. And so in the overnight, we came to 39.56. Now, could we test here again? Most definitely. Are buyers trying to hang on to the motion? Absolutely. But what is the formation? From a daily perspective, it says you sell the bounces. It's as simple as that. You sell the bounces. So if you're going to sell the bounces, you got to wait for the bounce. What do we want to see here? Well, we don't want to break the low of the prior day, but we also don't want to break the close of that prior day, because that's really where we're going to see this big battleground. You can see them coming in. They're trying to force traders off of the sidelines into the space. So we're going to look at that 65 area on the low and see how it behaves for us. I love the snap to grid in TrendSpider. It's truly beautiful. It gives me those nice levels that I can see. But again, what are we looking at? No direction inside on the monthly, retracement of direction. But notice the deep fades on these waves. This is normal motion. Buyers are still going to try and come in and hold the bottom. And then on the daily perspective, we're just flat out short. Every single wick gives us an opportunity to engage. Now, if you have been shorting on the breakdowns, you've been ripped to shreds. You short on the bounces, not the breakdowns, because we are not in a trending environment. Okay? You might go, well, it looks like it's trending if I look at the moving average. Yeah, well, the moving average is an average, and it's not going to pay attention to what your relative risk is. So take a look at what's happened. We closed on the low in the SPY yesterday. That's savage, okay? That's a savage fade. It's been a very long time since we've closed on a low, right? So now buyers are saying, holy cow, I better try to hang on here. The fact of the matter is we are going to have a battle, and I don't know that it's going to look lovely. I mean, I think traders are going to be really pressed to try and hold their support zones. That being said, this is all we really care about. We just care about where are we in relation to the prior day. Have we bounced? Yes, started holding, but now we're giving back everything. What did I say? You sell the bounces, right? When would you stop selling the bounces? Well, you want to get over the high or close / open of the prior day. So my thought is probably ought to rethink that if we actually get up and over 397. Let's take a look at the NQs very quickly. These guys are just inside their break. So from a monthly perspective, they look a lot better. But from a daily perspective, it's just like everything else. The dips, the deep dips are getting bought. And this is why we short and then take profit when the price action comes into support. All right, that is just exactly what is happening overall. This is very range bound, and today is Tesla day. So not really sure how it's going to move from that perspective, but we can definitely see that what we're doing is holding the close of last week. We're above it. Let's snap that properly. And from a weekly perspective, as long as we're bouncing off the 12,000 level, we're okay. All right? If we lose that zone and you're thinking about buying, you get out of the way. If you're short, you stay in the trade. But the bounces into this motion is where you want to sell. So look at those levels carefully, stop the screenplay, and then just have a good look at these regions. Notice the Qs sitting, wow, those are really bright. Let's change the stroke size of that. This is the open and close of that prior month. Whoopsie. All right. And so now all we're trying to do is hold. Are we making higher lows in the Qs? Yes. Are we making lower highs in the Qs? Yes. So this is a compression zone. If you piled everything into one candle, you would see it's all sitting in this big round space. So where do you want to be careful? Once it gets up over 295, maybe 295.30, you're going to stop shorting. And when you get down into the support here, you're going to cover. This is not about catching some big gigantic move. It's not here, folks. Every single fade is getting bought because there's no news and everyone is thinking all kinds of different things, so they're staged against each other. Just look at the candlesticks. Think to yourself, hey, listen, I'm going to eat small plates of delicious food at the market buffet, and I'm not going to hold out for the piling plate of whatever that literally you're going to drop before you get to your table. Okay? So just be careful. This is strategic and tactical trading, and it is required in this environment. Good luck. I'll see you on the Benzinga Pro platform. Take care.